Okay. So what are we going to take away from this session? What are we going to learn and understand? We are going to talk about like, is investment for all or not? Who should be planning to invest? Who can refrain themselves from investing? Then why is one required to invest? What are the various investment options available? What are the updates from the union budget, and few tips so that you can you won't be ending up paying a huge amount of tax or penalty or interest at the time of filing of income tax return. So starting with the first pointer is, who should plan for investment and giving the declarations to the employer. So initially, in the few slides from the beginning, we will be focusing mostly on the old tax regime, on the tax regime which existed till so many years, and now from now onwards, since past 2-3 years, we have this new tax regime. So initially, we are going to talk on the old tax regime only. So who should invest? So as per Income Tax Act, if your income is below 5 lakhs, then technically you are not required to invest. Why so? Because even if you invest, you will not get any tax savings or any tax benefit. Because up to rupees 5 lakhs, there is somewhere around 12,500 of.
Right now it is IM and SO only. IM is inventory transfer and SO is
not mute. Guys, please don't mute me.
So this is the inventory audit report that of that particular line item that
Why is this amount? Because up to rupees 5 lakhs, there is a tax of 12,500. This 12,500 of tax is given as a rebate under section 87A, so that you are not required to pay any tax. So now those people who are having income more than 5 lakhs, and if they are opting for the old tax regime, they will have multiple options where if they are incurring any expenditure, or if they are investing in certain options provided by the government, they can reduce the income by such expenditure or investment and save tax thereon. So generally, people opt for the old tax regime to plan for the investment, to take benefit of the expenditure incurred, and they try to reduce the income as much as possible so that they can save taxes. So there are various options, there are various expenditures on which the government allows you to save tax, like HRA, like the car allowances, your leave encashments, interest on home loan. So these are certain expenditures where you save taxes. Apart from that, there are investments under section 80C, under section 24B. So these are the sections where you can save taxes if you're investing. This has to be declared to your employer. This is, I think it is not required to be said, but it is required to be declared to your employer so that they can compute the exact amount of tax which you are required to pay in a financial year. And you don't end up paying more amount of tax or interest at the time of filing of return. Now, in case you forgot to declare it to your employer, so what is the remedy for that? Because anyhow, if you are not declaring certain expenditure, if you are not declaring the investments, the employer will deduct higher amount of taxes. Now, what is the remedy for this? You can take the benefit if you are eligible for the same. You can take the benefit while filing the income tax return. So if you have missed to declare the rent receipts, or if you have missed to declare the insurance you have paid, then you can take the benefit in the time of filing of income tax return. Okay, so your payroll team will be giving you deadlines so that you follow that and you declare it before the deadline closes. And just to avoid additional amount of tax, or just to avoid over deduction of TDS, you should declare it as in how you are paying or incurring the expenditures. All right. So again, now we are moving on to understand why should one invest. The first option we have already covered, which is to save taxes, because the more we invest, the more we utilize the available sections, we can save more and more taxes. Financial planning. So there are various investment options available. Which investment option to choose for? Okay. So they have certain lock-in periods, they have certain benefits, certain disadvantages. So you should be planning that not only to save tax, I have to invest properly so that I save tax normally, but I gain a good amount of return from that as well. And I have to plan whether I want to hold the investment for a short term or for a long term. So whether should I invest in a equity linked savings scheme or in a PPF? So this planning we should be doing it. Savings for future, obviously we are earning to live a healthy lifestyle. A standard of living, we should be increasing that. So we try to save more and more for future. This is anyhow why we save. Wealth and asset creation. So we are not only investing to save tax, we are investing to create a wealth. We are investing in property. The government gives us benefit of interest on home loan and the principal component as well. So we are creating wealth simultaneously while investing. We are investing in sovereign gold bonds. We are investing in public provident fund, and so on. Lastly, but not the least, is I would request that if you can put yourself on mute, so disturbance. Thank you. So yes, reducing the unwanted expenditure. So as we plan for investing, we can choose various options like SIPs or monthly we can do the investments. So why to plan it in such a way that once you receive the salary, you set aside a certain amount of money which has to be invested. This is because from the very beginning, if we have less liquid cash in hand, we will not spend it on unwanted things. We will not unnecessarily waste that. So generally, what the youngsters do is they spend on Flipkart, Myntra, Amazon. They will go on, in some good restaurants and spend the money in the very initial days. So which is very practical. They should so if they have this habit of investing for the future, if they have the habit of setting aside of money so that they can invest, they will reduce the unwanted expenditure. They can still enjoy with a small amount of money, but then they can plan for their future as well. So this is where we can reduce the unwanted expenditure. Moving ahead, we are going to explore various options which are available under the old tax regime. There are certain expenditures, as we already told, that on which you can save taxes. We are also going to talk about the investment options available to us. We are going to understand what all sections are available where we can save taxes, because if we are not, we not take the benefit completely. Okay. So the first is HRA, which is a very commonly known benefit what the government gives. If you are staying in a metro city, and you are paying rent, then at least 50% of the basic can be taken as exemption. But what people think is either the entire amount of rent what we are paying or the HRA received, the HRA component from salary, the entire amount is exempt from tax. You reduce that amount from your income. This is not the situation. So we have a certain calculation what we have to adhere to. We have to do this calculation to come to an amount that can be reduced from your income. So what is this amount? What is this calculation? So first is 50 or 40% of the basic. As I told, if you are staying in a metro city, then 50% of the basic, or if you are staying in a non-metro city, 40% of the basic. So as per Income Tax Act, there are only 4 metro cities, Delhi, Mumbai, Chennai, and Kolkata. Apart from that, there are certain metro cities, but they are not included in the ambit of these metro cities of Income Tax Act. So there are only 4 metro cities as per Income Tax Act. So 50% of the basic if it is a metro city, otherwise 40%. The second condition is actual HRA received. This can be seen in the salary structure. What is the actual amount of HRA we are getting? Thirdly, rent paid in excess of 10% of your salary. So whatever rent we are paying, we have to consider whatever excess rent we are paying over and above 10% of salary. So anything of these three, whichever is lower, that amount is reduced from your salary as HRA exemption. So generally, this calculation is done by the payroll team before computing the amount of TDS. You need not to worry on this. But in case if you have not submitted the proof and while filing the ITR, you want to take the benefit of HRA, you can take this calculation into consideration and then you can put it. Otherwise, if you just consider the entire amount of rent, then you may receive a notice and then you have to respond back, and then you end up paying some taxes. So this calculation should be kept in mind. Second type of expenditure is leave travel allowance. So as per the name, it says whenever you are traveling after applying leave with your employer, whatever expenditure you have incurred for travel, you can claim that as a leave travel allowance exemption. So what all expenditures are included in LTA? So only to and fro, only going and coming back expenditure of any of the first class or second class train or third AC or whatever train class you are traveling, and either and only the economic class flight is allowed. So if you are traveling by business class, then the expenditure cannot be claimed. You can only travel by economic flight, or if you are traveling by train, then any class can be covered. So it is given in a block of 4 calendar years, 2 times. So twice in a block of 4 calendar years. The fresh calendar year has started from 1st of January 2022, and it will end on 31st December 2025. So within this block, if you are traveling, you can take the benefit only twice, only like any 2 financial years. All right, this is about LTA. There are other expenditures where you, if you are traveling, if you have this component in your flexi benefit plans, then you can utilize this to save your taxes. The petrol expenditure, what you incur for motor car, if you are traveling it for no, if you're traveling from your house to office or for any official purpose, then the petrol expenditure of motor car can be taken as an exemption, but it has to be clarified with your payroll team if you have this component or not. Uniform allowance, it can be allowed if it is there in your component. Food coupons, 2200 per month, it can be allowed. So this all you have to check with your employer if that is available as a flexi benefit. Moving on to the other type of expenditures and investment. So we were talking about on the income, like buying a house property on loan. So this is actually a wealth creation or asset creation where the government gives you certain benefits. So I think this is also a common known topic, that if you are taking if you are buying a house property, you are taking that house property on loan, then whatever interest expenditure you are doing on that loan, so you can just see from the interest certificate how much interest you have paid for a particular financial year. So that interest component up to rupees 2 lakhs in a financial year can be claimed as a deduction from your income. So up to rupees 2 lakhs if it is a self-occupied property. In case if it is a let out property, which means that you bought the property, put it on rent, and now you are receiving rent, still you are paying interest on home loan for that property. In that case, it is still rupees 2 lakhs, but beyond rupees 2 lakhs, if you have any losses, you can carry forward that same loss to the further years. Okay, so generally speaking, a property can be self-occupied where the SSE is staying, or it can be a let out property where it has been put on rent and you are having rental income. So there are two types of situations where it is a self-occupied property or it is a let out property. Additionally, beyond rupees 2 lakhs, you have one more section where if you had taken the property between 1st of April 2019 to 31st of March 2022, in that case, you can take the benefit of section 80EEA if the property, if the stamp duty value of the property was 45 lakhs or more. I'm sorry, is there a question?
No, we can continue.
Okay, all right, fine. So as I was saying that we can take the benefit of interest on home loan up to rupees 2 lakhs if it is a self-occupied property. For let out property, we can reduce the interest on home loan from the rental income. Beyond that, if it is a loss up to rupees 2 lakhs, we can adjust with the other heads of income. If it is loss beyond rupees 2 lakhs, then anything above and over and above 2 lakhs can be carried forward to the further years. All right. So I was also saying about the section 80EEA. If you had taken the loan between 1st of April 2019 to 31st of March 2022 from a bank, and the stamp duty value of the property was anything less than 45 lakhs. And if it was your first property, in all these situations, there was one additional section under which 1.5 lakh additional benefit could have been taken. So knowing this section is important. If anyone has satisfied this criteria but missed to take the benefit, you can still take the benefit under section 80EE. Moving ahead, now we will see certain expenditures and certain investments which can be claimed under section 80C. So what are these expenditures? So if we talk about the investments first, PPF, Employee Provident Fund, or VPF, means Provident Fund, any type of Provident Fund. If you are investing in the same, then you can take the benefit under section 80C. Maximum limit is 1.5 lakh. The entire section's maximum limit is 1.5 lakh. Okay. Apart from that, if you are spending on your children's education fees, the tuition fees, whatever you are paying for children, that can also be considered under 80C. The development fees or the donations what we make towards the admission is not allowed for deduction. Life insurance premium, if we are paying, or any term insurance premium if you are paying, then you can take the benefit under 80C. Principal component, now we just talked about the interest on home loan. So what will happen to the principal component, the repayment of the principal, what will happen to that? That is also can be considered under section 80C. So if after PPF and children education fees and LIC, you are not able to fulfill the limit of 1.5 lakhs, and if you have interest on home loan going on, so the principal component can be covered under section 80C. Okay, now say for example, you don't have a home loan, you are not investing in PPF, you do not have any other expenditure which can be claimed under 80C, then what are the investments where you can invest and you can save taxes? What are the investment options available to us? So the first is equity linked savings scheme. Why is it classified as first? Because it has the least amount of lock-in period. The lock-in period is only 3 years. So this is an investment option. It is actually a market linked mutual fund where you can invest and you can save taxes. So it is available both in SIP and lump sum. So generally, if you cannot take out the lump sum investment at once, we can advise you to go for a monthly SIP. As I told that every month in the very first week, you can plan for all these investments. You can go for the SIP option. Otherwise, if you have accumulated a good amount of money, you can also invest lump sum. When the market is down, like when the market is going down, it is a good time to invest in a lump sum way. The capital gains, however, will be taxable. So when you are selling ELSS after 3 years, after the maturity, then you can take the benefit of 80C, and whatever capital gain you are earning, that also will be exempt up to rupees 1 lakh. But beyond 1 lakh, you have to pay capital gain tax of 10%. So this is a very lucrative option. If you don't have any other options to save under 80C, you can invest under ELSS. Now, for those people who are not ready to take any risk in the market, because obviously this equity linked savings scheme is an equity scheme under mutual fund where you can invest. So it will come with some market risk. If you are not ready to take any risk in the market, for you, we have tax saver FD. So what is a tax saver FD? If you are opening a fixed deposit classified as a tax saver FD, then you can save taxes under section 80C. So it has a lock-in period for 5 years, but whatever interest you are generating from this tax saver FD will be taxable. There is no such exemption on the interest income. Just like this, we have other options, which is National Savings Certificate or Post Office Deposit Schemes. This is also comes with a lock-in period of 5 years. Interest, however, will be taxable. So if you are not able to complete the limit of 1.5 lakhs, then you can choose these options as well. Apart from this, there's one good option where both the investment and the income is tax free. So it is called as Sukanya Samriddhi Yojana. So those people, those parents who have a girl child, or who have more than one girl child, then also they can invest in both the girl child's name. You can open an account in her name and you can deposit anywhere between 250 rupees to 1.5 lakh in a financial year for one girl child, and you can take the benefit. So whatever amount you are investing in that account, that can be taken as a deduction under section 80C. All right. So if you have two girl childs, you can open two accounts, you can deposit any amount you want, but up to 1.5 lakh in total under 80C can be taken as a benefit. So what are the conditions? The girl child should not be more than 10 years of age. So you can open an account in her name till she attains the age of 10. So only one account per girl child is allowed. You can only withdraw. So there is a limit to withdraw this. You can only withdraw for her higher education and her marriage. So if you're planning for a higher education, you can withdraw the amount from this account. Or if you're planning for her marriage, then only if she attains the age of 18, you can get her married and you can withdraw the amount. However, if the account has been active for more than 21 years, the account will automatically mature and you can withdraw the money and you can use for her. So whatever deposits you are making, it is exempt from tax. And also whatever interest income is being generated, whatever income interest you are earning from this account, that is also exempt from tax under section 10. So this is one option where both investment and income is exempt from tax. You can choose the investment options and you can plan for your girl child's future. Apart from this, we have several other investment options which should be known to us. Then only we can save taxes, because most of these are not known to us. One is employees' contribution to NPS and employers' contribution to NPS. So whenever your employer is giving you any benefit, anything where you can invest in the national pension scheme, when you contribute something, the employer also has to contribute something. So your contribution is covered under the limit of 1.5 lakh of ATC itself. However, it has to be reported under a different section, which is ATCCD1. So if you are investing in NPS through your employer, your contribution comes under the limit of ATC 1.5 lakhs. The employer's contribution, the whatever amount the employer is contributing for you, it can be taken as a deduction under section 80CCD2. The maximum limit is 10% of your salary. So whatever amount he's investing on your behalf, then up to 10% of your salary can be taken under 80CCD2. This is the only section. This is the only section till now which is available both in new regime and the old regime. So old regime we are seeing right now. What are the sections available? This particular section, employers' contribution to NPS, is available in new tax regime as well. Apart from this, say for example, I want to save more taxes. I have a good amount left with me which I can invest for long term, and I want to save taxes. What options do I have? So we can take the benefit of additional contribution to NPS, which is a voluntarily NPS account what you are creating. So you can take the benefit of maximum 50,000 if you are investing voluntarily from the section 80CCD1P. So if you want to save more taxes beyond ATC and ATCCD2, you can invest in NPS voluntarily and you can save taxes up to 15,600, because the maximum deduction available is 50,000. Apart from that, like several households have this habit of investing in gold. So what they do is on every occasion they invest on gold and they keep the gold in house. However, you do not get any tax benefit by buying a gold. Okay, buying any gold or any bullion, coins, jewelry, you do not get any benefit. However, when you are selling the same, you are selling gold coins, or if you are selling the gold bars, that will be subject to capital gain tax. So we have an option where if you want to invest in golds, you can take the benefit of sovereign gold bond investments. So these sovereign gold bonds are basically electronic gold investment. You can say it is kind of a government bond only, but they invest in gold. The price is determined as per the price of the gold in the market. So what are the exemptions available in sovereign gold bonds? So as such, the investment does not give you any exemption because it does not come under ATC. However, if you are holding the sovereign gold bonds till the expiry, means if you are holding it for at least 8 years, after which it will mature, then whatever capital gains you are earning on that, that is exempt from tax. So which means if in 2010 you bought sovereign gold, in 2018 you sold the same, held it for 8 years. Anyone having a question? Okay, thank you. So yeah, so if you are holding the sovereign gold bonds for at least 8 years, which is still maturity, then whatever capital gains you are earning, that will not be taxable. So this is an alternate to the gold investment where you can save taxes. So we should be knowing about this. If you want to invest in gold, you can choose this option as well, where you can save tax. Apart from that, there is a well-known section 80D, where we all know that if we are paying medical insurance or health insurance for our family or our parents, then we can save taxes there. So what is the amount what we can save? So for the assessee himself and the spouse and children, okay, like if I am paying for health insurance, so for myself, my spouse and my children, I can pay for medical insurance and I can uh, deduct the same up to 25,000. So until and unless I am a senior citizen, the limit for me will be 25,000. Once I or my spouse turns a senior citizen, then the limit will be increased to 50,000. Now, what will happen in case of parents? So, if any of the parents have not achieved the senior citizenship, then for them the amount remains 25,000. So, whatever you are paying for the health insurance premium, up to 25,000 you can reduce from your income if you are paying for them. And if your parents turn senior citizen, any one of the parent turns senior citizen, then the limit cumulatively will be 50,000. So you can take the benefit up to 50,000. Now, what in case you have not taken any medical insurance for your parents who are senior citizens, but you end up paying some medical expenditure. You like they had to be hospitalized or they had some operation to undergo. So if you are incurring certain expenditure, but they are not covered under any medical insurance plan, either through company or through on a voluntarily basis, then what will happen to this medical expenditure what you incur? So this medical expenditure can be taken as a deduction up to 50,000 only if they are a senior citizen, or if you are doing for yourself and you are a senior citizen, in that case you can take the benefit up to 50,000. Apart from that, we have several other sections which are lesser known, because we generally do not know about these sections and we cannot take the benefit as well. So we should be knowing these sections in detail so that if it is applicable to us, we can take the benefit and we can save more taxes. So the first is 80DD, 80DD, which is dependent. If you have a dependent who is a differently able dependent. So if the disability is between 40 to 80%, then a flat amount of 75,000 can be taken as a deduction. And if the disability is more than 80%, then a flat amount of 1,25,000 can be taken as a deduction. So you can check if you have a dependent who is differently abled, who is dependent upon you, and you are spending on their treatment. So if this is applicable to you, you can take the benefit. But they should be a dependent. It should be like, within the close relative definition. It should not be a far relative dependent on you. So it should be coming under the definition of dependents, relatives and dependents. There is one more section called as 80DDB. So if you or your dependent is diagnosed with a specific disease, in that case, whatever amount you are spending for the treatment, you can take the benefit. This is over and above the section 80D. Okay, so it is 80DDB if it is for you or for your dependents. So the specific diseases are like cancer, AIDS, motor neuron disease, Parkinson disease, lymphoma. So these diseases, it can be covered under 80DDB. So any amount spent for a non-senior citizen can be taken as a deduction up to 40,000, and for a senior citizen up to 1 lakh. So whatever amount you are spending, this amount can be taken. So again saying this is over and above 80D. Now there's one more section 80U, which is similar to section 80DD, the first section what we discussed, 80DD. So if you are differently abled, you can take the benefit of 75,000 or 1,25,000, whatever it is for yourself. Apart from that, if you are taking any education loan for higher education for yourself or for your dependents, if you are taking an education loan, in that case, whatever interest on the education loan you are paying, that can be taken as a deduction. So it does not have an upper limit. Whatever amount of interest you are paying on the education loan, it can be taken as a deduction. Apart from that, a very well-known section is donations, ATG. So whatever amount we donate, we can take the benefit. So it does not go like this. So we have to see to whom we are donating. If we are donating to a charitable institution who does not have an ATG registration, then the donation will not be eligible for deduction. But if you are donating to a charitable organization who has a registration of ATG, then whatever you donate, only 50% can be reduced from your income. Only 50% can be taken as a deduction. Like say, for example, if you are donating rupees 1 lakh to a charitable institution who has ATG registration, then 50,000 can be reduced from your income and you can save taxes on that 50,000 only. If you are donating to some PM cares or CM relief funds which are eligible for 100% of deduction, then you can take the benefit of 100%. Otherwise, we have to see whether it classifies for 50 or 100%. Any cash donation more than 2,000 is not eligible for deduction. So please make sure that you are not donating in cash. You are donating through banking channels only, and then only it will be eligible for deduction, otherwise not. So any cash donation more than 2,000 not eligible. Okay, so we have been talking about the old tax regime and the various investment options available. Now we will be looking on to the new tax regime till this financial year, which just ended on 31st of March 2023, and for which you are going to file in the month of June and July. So we are going to look at the new tax regime from that point of view, as well as we will be looking the new tax regime after the introduction of this budget, which is applicable from 1st of April 2023 for the financial year which just started. So we'll compare both. We will advise you like for the previous year which just ended, for which you are going to file the return, and also for next year how you can plan, whether you can choose a new tax regime or you should be sticking to the old tax regime only. So first of all, we have seen, like from our past experience, we have seen people are more interested in choosing the old tax regime because they have a habit of investing. They have certain expenditures on which they can save taxes. One of the major expenditures is house rent allowance. They are saving a good amount of tax on that. Over and above that, they have some PPF contribution, life insurance, medical insurance. So they can save more taxes compared to the new tax regime. So we have seen only 10% are opting for the new tax regime. Remaining 90% are sticking to the old tax regime because with just a slight effort, you can save more taxes. So instead of paying more taxes, it is okay to invest. But if you are opting for the new tax regime, we have to be sure, we have to keep in mind that we will not get any exemption or any deductions. Like we are not eligible for HRA, we are not eligible for house rent interest, we are not eligible for ATC, ATD, whatever it is not eligible. Only one section what we talked about is employer's contribution to NPS. So that is only eligible for new tax regime. Rest everything is not available in the new tax regime. So if you have such investments, if you have such expenditure, please stick to old tax regime, or you can compare how much tax you are saving in both the regimes. Accordingly, you can opt for the same. So as we see that if you have if you have exhausted the limit of ATC, if you have exhausted the limit of ATD, now where all you can invest, we have talked about one more section, which was voluntarily contribution to NPS, which is a long-term investment thing. There you can save more, close to your 15,600 if you invest 50,000 in that NPS scheme. it is a long-term investment plan. So this is just an example to say, if you invest, if you have the habit of investment, you can save more taxes compared to the your new tax regime, whatever it is. So again, like though it is situation to situation based. Like say for example, if I want to have some liquid cash in hand, I have some obligations to meet immediately. I cannot invest. I cannot keep the money locked in for a longer period. I need the money immediately within this year or the next year. Then you can choose the new tax regime. Then you don't have to go for the old tax regime because you don't have to invest. You don't have to give any declaration. If you are staying in your own house, you're not paying HRA, then no point of going to the old tax regime. So, but this comparison has to be done every time when you are opting for the regime or when you are filing your income tax regime. So, during the session, we'll be sharing you the income tax calculator also. You can use that to understand which regime is beneficial to you. Apart from that, as we have told that all the traditional investment sections, etc, ATD, all of these are not available in the new tax regime. So please be very clear when you choose the tax regimes. Now we are going to touch upon the Union Budget 2023, what the changes have been introduced in this budget. So we are only going to talk about the changes which are applicable from this financial year which just started. Okay, so you are going to file for this in the next year. So we have an ample amount of time to plan. So we can have a look on this, and we can understand if it is better for us to stick to the new tax regime or we have to go back to the old tax regime or not. So mostly in this budget, there are mostly changes in the new tax regime only. So what are the changes introduced? The first thing is the new tax regime becomes the default tax regime. All right. So now you have to choose whether you want to go back to the old tax regime or you want to stick to the new tax regime. Previously, it was opposite. Okay. So the new tax regime becomes a default tax regime. Second is a standard deduction of 50,000 has been introduced. So for all of those who are salaried employees, for them the standard deduction is introduced for rupees 50,000. This was only available in the old tax regime. This is not available in the new tax regime. Now the slab rates have changed. So I think those people who are opting for the new tax regime, they know it that they up to rupees 2.5 lakhs, there was no tax. Between 2.5 lakh to 5 lakh, the tax was 5%. And with increase of 2.5 lakh of income, there's an increase of 5% of tax. So if you see 5 lakh to 7.5 lakhs, 10%, 7.5 lakh to 10 lakh, 15%, and so on. And beyond 15 lakh, the tax rate was 30%. But in the new tax regime, if you see after the budget, what changes have been introduced? The limit has been increased to 3 lakhs. Earlier it was 2.5 lakhs. Now it is 3 lakhs. So up to 3 lakhs, you don't have to pay any tax. And the with every increase of 3 lakhs, there is an increase of 5% of tax. So the slab has changed. It will be actually beneficial because if we compare previously, if your income was up to 15 lakh, the tax was 25%. But now it has been reduced to 20% only. So those people who are opting for new tax regime, they can choose the option of new tax regime only because it will be beneficial. But if you have investments, then old tax regime will be beneficial. What are the other changes? What have been introduced? So as we talked about the rebate under section 87A, we talked about that in the old tax regime, up to 5 lakh of income, whatever tax comes at, it will be allowed as a rebate. So under the new tax regime, this limit has increased from 5 lakh to 7 lakhs. So now if you are earning up to 7 lakhs, you are not required to pay any tax. So up to 25,000 of tax can be taken as a rebate. Now what will happen if your income is more than 7 lakhs? In that case, you have to pay the entire amount of tax, whatever it comes after calculation. There is no rebate. But the government has given you a marginal relief. Say for example, if your income is 7,10,000, okay, then if you say that by the calculation the tax amount comes around 30,000 rupees. Why do I have to pay 30,000? For those people who are earning 7 lakhs, they are paying no tax. I am earning 7,10,000 and I'm paying 30,000 of tax. This is not correct. So actually, this is not correct. That is why the government has given a benefit of marginal relief. There is a rule that the tax cannot be more than income. So there is a concept of marginal relief, that how much income has how much tax has increased with a slight increase of income. On that basis, we can compute that how much additional amount of tax we have to pay. So instead of 30,000, we have to pay a very less amount of tax. So any person who is earning 7,27,000 approximately, then they can take the benefit of this marginal relief. But you have to do the calculation how much marginal relief is available to you. Okay, so there is a concept of presumptive taxation. So those people who are having small business or small profession, or they're having freelancing income, they can take the benefit of presumptive taxation. It is under section 44 AD, 44 ADA, 44 AE, and so on. So, but generally the 44 AD and 44 ADA are well known. So if you have a business, whose turnover is not more than 2 crores, okay, if you have a business whose turnover is not more than 2 crores, or if you have profession whose turnover is not more than 50 lakhs, they were available under presumptive taxation scheme. After this budget, the limit has been increased from 2 crore to 3 crore for the business, and 50 lakh to 75 lakhs for profession. But there is a small condition that not more than 5% of your cash receipts should be present. So if you are having cash receipts less than 5%, then you can take the benefit of this increased limit of 3 crore and 75 lakhs. So if this condition of 5% is not satisfied, then the existing limit of 2 crore and 50 lakh will be available to you. Now, with a small example, we will understand which regime will be better to us. Like as we told that we'll be comparing between the old and the new tax regime. So what we are doing is we are comparing the old tax regime with new tax regime before and after budget. So this will help you understand how much benefit we are getting after the budget if we are sticking to the old tax regime or the new tax regime. So we have taken a sample salary of 16 lakhs so that we can have a good amount of income with a good amount of investment options to compare how much tax we have to pay. So any person who is earning 16 lakhs now is confused whether to go for the new tax regime or the old tax regime. So under the old tax regime, he gets a benefit of 50,000 of standard deduction. After the budget, if he is choosing for the new tax regime, he will get the benefit of standard deduction. But before budget, it was not available. Interest on home loan is only available under the old tax regime. It is never available in the new tax regime. Same goes for ATC, ATD, ATCCD1. These are not available under the new tax regime. So if you have such options, if you want to invest, then if you see, you are reducing your taxable income to a great extent. Your taxable income is coming down to 10,50,000 only. Comparing the same with the new tax regime, it is 1,50,000 after budget, and before budget, just because of the standard deduction, it was 15,50,000. Now, if we see how much tax we have to pay, so if we are sticking to the new tax regime, then if you see there is a difference between the pre-budget and post-budget tax. Pre-budget, it was 2,10,600, and after the budget, means from this particular financial year, you will be saving a good amount of tax, which is close to 44,000. So it is 1,56,000 only. But if you are sticking to the old tax regime, if you are taking the benefit of investments and expenditures, then you are only paying 1,32,600, which is a huge difference. So you can save a huge amount of tax if you are sticking to the old tax regime only. So, but again, we have to compare, say for example, various investments or various expenditures are not available to me. So I may have to compare if by going to the new tax regime, I can save more tax or not. So every time by choosing the regime or while filing the income tax return, you should be doing this comparison, which regime is better to you. And we have discussed in detail about the investment options available, where all you can invest and what all benefits you can take. So if you have any further questions, you can ask me. I'm open to questions now. I believe Mr. Secretary would have answered all the questions in the chat box. And if you have any other questions, you can please ask me. Do we have any questions?
Okay, so Rahul, we have a question on chat box from Mr. Ravindra. So
Okay.
if you want to unmute and he can ask question, then he's okay with it.
How much,
Hi,
how much can we invest in
Rahul.
SGB? So SGB, the maximum investment is 4 kgs of gold you can invest, but it comes in a block. Okay, so there is a slot available. It can be anything between like 5 or 10 or 15. So maximum it goes to 4 kgs, 4 kgs of gold. So the lock-in period is 8 years, as I've already told you.
Okay, so participants can ask question, they can unmute themselves and they can ask the question, or they can drop your question on chat box.
And also we have dropped the tax calculator. You can save the link and you can take the benefit of this. You can understand that which regime will be beneficial to you. Mostly it will be there available in your payroll portal also, but you can take the benefit of this as well. And you can see what all investment options are available for you. Fine, I think there are no more questions. I hope you like the session was helpful to you guys. So if you have any further questions and you are not feeling right to ask it here, you can drop your questions at support@cleartax.in and we will be happy to answer that. Or you can reach out to the POC from the corporate partnerships. We can answer your questions. All right, I think we are at the end of the session and wind it up. Thank you everyone for joining.
Yep.
Thank you, Rahul.
Thank you so much.
Thank you so much.
Welcome.